That's my new metric for assessing banks. You used to look at working capital and debt equity ratios and bad assets. Governments. There are lots of ways to measure the health of a bank, but the most relevant way right now is, and this is publicly available, take the ratio of uninsured deposits to total deposits. 30% is comfortable. If you're like, 70% of my deposits are insured, which means they're not panic either, not necessarily going to run for the hills. 30%. Okay, uninsured, but I have assets. I have that much cash or more. That's a comfortable ratio. When you get over 50, you're in the danger zone. Well, Silicon Valley Bank was 97% uninsured, which meant all the money was going to run, and it did. So that's a way. If you're looking at these big banks or any institution or your own savings institution to look at it. But Silicon Valley Bank was a climate bank. Were they investing in startups? Yes. Were they investing in technology? Yes. But these were climate. These were green new scam startups looking at battery technology, chemistry, physics, to try to make a better battery by the not much improvement in the battery in 200 years. But they're working on it. Wind turbines, other sustainable fuel alternatives, etc. Again, I'm not do that if you like, if that's your field of research. But so much as it's subsidized by the government and then further subsidized by Silicon Valley Bank, and that's where the assets were. That's where the loans were, by and large. And so the White House is getting hammered, not only because of entrepreneurs' job losses. And by the way, we are in an election cycle here in the United States, but from the Greenies, who are extremely powerful. So that was Friday night. So Saturday, everyone's crying to the White House Sunday night at 6. By the way, mark that on your calendar. Sunday, 6 p.m. is when they tell you what they're going to do. p.m. Sunday, November 12th. They came out on March 12th. They came out on Silicon Valley Bank. The following week, December 19th, 2023, that was Credit Suisse. And then the week after that, it was something else. But they always announce the collapse on Friday, and they announce the relief on Sunday. So they have the weekend to work on it. But you got to be careful about 3-day weekends. Easter is an example. On 6 on Sunday, March 12th, 48 hours after the FDIC announcement, the government said, just kidding. The deposits are fine. They did a complete 180 under pressure from the Fed, the White House, etc. Even though FDIC did the right thing legally, they said all the deposits are good, all of them, including my friend's $8 billion and somebody else's $3 billion, etc. And then they went further. And this is what I meant, Brian, by the biggest ballot in history. JPAL said to every member bank, not Silicon Valley, but every member of the Federal Reserve System, if you have underwater bonds, U.S. government securities, Treasury, or certain mortgages, you can ship them to us. We will give you a loan at par value. We'll give you cash equal to par value, even though the loans are only worth $80 to 85 cents on the dollar. Because interest rates have been going up for over a year, the value of the bonds goes down. That's bond math 101. Rates up, bonds down. Prices down. Rates go down. The prices go up. Well, the rates have been going up, so the prices are down. Bonds are worth 80, 85 cents on the dollar. But here's the Fed saying, we'll give you 100 cents on the dollar for your 85-cent bond on a 1-year loan. So the loan was important because it means they didn't actually sell them. It was collateral for a loan, except you're under collateralized. And the Fed's like, okay, I said, I have a 14-year-old car that my dealer says he won't give me any money for. So I sent a tweet out. I said, hey, Faye, would you give me the $70,000 and pay for it? It's not worth anything, but let's get back to par here. That's what the Fed was doing for the entire system. But the thing is, Brian, you're talking about multiple trillions of dollars of bonds that fit that description I just gave you. Now, the banks are kind of saying, that's good. That's a good deal. I'll take that. I'll do that myself. Here's something under collateralized. You give me the cash on a 1-year low interest rate loan. And now, in theory, I've got all the cash I need to pay depositors if they're taking the money out. But better yet, I don't have to record the loss. See? Because I could sell the bonds in the market and get cash and pay my depositors. But the minute I do that, I've got to mark down my entire portfolio. And by the way, those unrealized losses estimate probably $800 billion in the banking system as a whole. So you've got $800 billion of buried losses. And here's the Fed saying, we'll give you 100 cents on the dollar, even though your bonds are worth 80 and you don't have to take the loss because it's structured as a loan. not a sale. So this is a multi-trillion-dollar bailout. It's legal in the bare sense, but it's an accounting game. It's a bailout game of unprecedented magnitude. And by the way, we'll get a year from now, March 2024, they'll extend the loan. I mean, it's only 1 year. Yeah, exactly. You're not going to be able to repay this. Who says interest rates are coming down? We'll see, but they're just extended. But this goes back to my earlier point. What else you got in your bag of tricks? I mean, you just guaranteed every deposit in the system. De facto, you just guaranteed par value for trillions of dollars of government securities that are underwater. You just told everybody they don't have to record any losses. You've just given them all the cash that your printer can print with no consequences. But then again, what else have you got? There's nothing else they can do. And one more twist on this. Remember what the Fed's been doing for the past 14 months. They've been raising interest rates. Yeah, we know that. But they've also been reducing their balance sheet. I run to people all the time. They bang the table. Hey, the Fed's got to stop printing money. They're printing too much money. They've been burning money. They've been reducing the base money supply for over a year, about a year and a half. Well, now, okay, so the base money supply is coming down, rates are coming up. But what does it mean if $1 trillion worth of bonds show up and the banks delivering the bonds say, give us the cash? Where does the cash come from? The Fed prints it. So now you're going to expand base money by perhaps $1 trillion or more at a time when you've been pretending to reduce base money. So this completely blows up their monetary tightening. Okay, they're not cutting interest rates. We'll see what happens there. But they are increasing the money supply by, again, estimate upwards of $1 trillion. So what happened to your inflation fighting? What happened to your monetary tightening? And they just want to pretend. You do have to be expert to understand all these mechanics, but they're not that hard to explain. I mean, you can just say it in plain English, which is what we're doing. But from a policy point of view, it completely blows up their monetary tightening. That's the point. The universe of people who really understand this, certain lawyers, certain regulators, certain analysts, just experts, because that's what they do, is pretty small. But the overlap between that group who really get it and the group who have an interest in making sure no one else understands it is large, meaning they're all in on it. The number of people who really get it, they can raise their hand and say, I'm an expert in federal finance, government securities and repo, and off-balance sheet accounting and all that. And I think you're trying to pull the wool over people's eyes. That's like a handful. I'm one of them. There are others, glad to say. And that's the other thing that I just had low tolerance for just the lies. If you have to do what you have to do, yeah, you don't want the whole system to collapse. I understand that. But you can be honest with people about it. Well, one thing I really like about Britain is regulators, politicians. They mess up and they make mistakes and happens all over the world. But the British are really good at stepping up. They resign. If you've done very badly,